Hello, good afternoon, good morning for those in the Americas. My name is Sandra Carvão, and I'm the Director of Market Intelligence Policies and Competitiveness at UN Tourism. It's a great pleasure to have with us today our colleagues from the English-speaking countries in the Americas for this exchange of views and insights on travel trends in the Americas with our partner and affiliate member, Amadeus. The partnership with Amadeus, it's a long-standing one. Last year, for the first time, we did a series of insight workshops and reports for the Americas, and we are very happy that we have continued to strengthen that market intelligence for you, member states and industry, for all those following us on YouTube as well. It's a great pleasure to be able to have this exchange of views and using, as it is, the mandate of UN Tourism, making accessible data and updated information on market trends that can guide your policy decisions and your actions on the ground. Without any further ado, I would like to welcome everyone and to give the floor to my colleague, Javier Ruescas, who will do the presentation of the latest results of the World Tourism Barometer to give us a setting the scene on what is happening worldwide and the Americas before we delve into trends and insights on accommodation and air transport. Javier, the floor is yours.
Thank you very much, Sandra. Good morning, everybody. I'm Javier Ruescas from the Market Intelligence Policies and Competitiveness. As Sandra just said, I will provide a short overview of the recent trends in international tourism. I'm just going to share my screen. Please confirm that you can see it.
Yes.
Thank you very much. So we just published our fourth and last issue of the World Tourism Barometer in November with the latest results on international tourist arrivals and receipts for the first 9 months of the year. I will start with this slide, which gives you a bit of the context of where we come from. This shows the recovery of international tourism after the pandemic. So you see the data there starting in 2019 and going up to 2024. In arrivals, the recovery happened last year in 2024, where globally 1.5 billion international arrivals were recorded. So roughly the same amount as in 2019. In terms of export revenues from tourism, which is the green spheres there in the second line on this graph, the recovery was actually a year earlier. It was in 2023, where you see $1.8 trillion in international revenues from tourism, which is slightly above the pre-pandemic value of 1.7. In terms of the direct contribution of tourism to the global economy, to GDP, the latest data we have is $3.4 trillion for 2023. And again, that recovery also happened a year earlier than the actual number of arrivals. In this graph, you can see the evolution from 2006 up until 2024, a fairly steady pace and trend of growth since the beginning of the year of the 2000s, except for a little decline in 2009 with the financial economic crisis. And then the biggest decline in recorded history, which was in 2020, as you very well know, with a 72% drop in international tourist arrivals. The trend has then recovered gradually and recovered pre-pandemic levels last year with 1,468 million international arrivals. On the same graph, in the green line here, you can see the evolution of international tourism receipts, which is the visitor spending in destinations, which shows a similar path, slightly smaller drop in 2020, because the average spending per international trip actually increased during the pandemic, and the recovery was actually faster as well. So as I mentioned before, receipts, tourism receipts or visitor spending in destinations recovered pre-pandemic levels in 2023, a year earlier than the actual number of arrivals. And in 2024, as you can see on the right-hand side, top right-hand side of the graph, receipts reached $1.7 trillion, which is 14% above pre-pandemic levels. In this graph, you can see the evolution, the same information, but on a percentage, from a percentage point of view, you can see 72, 69% decline, then 33 in the year 2022, as countries were gradually reopening after the pandemic was starting to recede and the rollout of the vaccines. In 2023, arrivals were already at 90% of pre-pandemic levels, in other words, 10% below 2019. And finally, in 2024, a full recovery of international tourist arrivals. So far, in January, September 2025, so the first 9 months of this year, international arrivals have grown 5% compared to the same period in 2024. This graph shows the same information, but all of these percentages are relative to 2019. So again, the recovery really accelerated in the year 2022 with 67% of arrivals, then 90% in 2023, and the full recovery happened in 2024. In January, September this year, arrivals are 3% above 2019 levels. This is the same information, but for the region of the Americas. So a very similar trend with the recovery from the pandemic really accelerating in the year 2022. You can see there in the center of the graph, 72% recovery in international arrivals in the Americas that year. Then that percentage jumped to 91% in 2023, which is really close to a full recovery. Quite a fast recovery in the case of the Americas compared to other world regions. It was one of the fastest to recover. However, in 2024, the percentage recovery stopped short of full recovery, so 99%. And then in the first 9 months of this year, 2025, the recovery is still at that same level of 99%. And we'll see that in a minute, why that is, but it's mostly because of slightly weaker results in North American destinations, particularly the United States and Canada. So this graph simply compares the growth in arrivals in January to September 2025 compared to last year. So the blue bar is the percentage growth from 2024, and the orange bars are the percentage growth from 2019. So you can see that all regions, all world regions, except for Asia and the Pacific, have recovered pre-pandemic levels. Asia Pacific is still lagging behind a little bit with arrivals 10% below pre-pandemic levels. In the case of the Americas, its arrivals were actually 2% higher in this 9-month period, 2% higher than last year. But as I said earlier, 1% below 2019 levels. Okay, this is again January to September, the total international arrivals in the first 9 months of 2025. Here we break it down by sub-regions within the Americas. So you see there what I was mentioning before, North America had slightly weaker results in this first 9 months of the year compared to last year. So I think it's 0.5% to be accurate. Here, percentages, as you can see, are rounded, but North America was the only sub-region to record a slight decline. South America was the strongest, with 9% increase in international arrivals through September. The Caribbean saw 1% increase with mixed results across individual destinations, and Central America 3%. If we look at this same information, but compared to 2019, we get that, which is the orange line. So in the Americas overall, arrivals are 1% below 2019 levels, but in the individual subregions, the situation is kind of mixed. So in the Caribbean, for example, arrivals are already 12% above pre-pandemic levels in this period of 2025. In Central America, it's 22%, and in South America, 9%. So these three subregions saw fairly rapid recovery from the pandemic, and so far this year, they remain well above pre-pandemic levels. Okay, this is the same information, but for receipts. So this is the recovery of international tourism receipts in the Americas. In 2023, you see there at the right-hand side of the graph, receipts were already at 101% of pre-pandemic levels. In other words, the recovery of visitor spending in destinations had reached 2019 levels, 2019 levels in 2023. And last year, 2024, receipts were 17%. Receipts were 17% above pre-pandemic levels. Again, due to this generally global trend of higher spending per international trip, which we've seen in many parts around the world. Okay, this graph shows a list of the 20 best performing destinations between January and September this year in terms of arrivals. In other words, in terms of international visitors, only countries which have reported data through August. If countries have reported data only up until June or July, for example, which is the case of some destinations, even though their growth is strong, they won't appear in this ranking of best performers. So you see there three destinations from the Americas with fairly strong growth. One is Brazil in second place up there with 45% increase in arrivals. And then the islands of Curacao and Dominica in the Caribbean, both with 13% increase in arrivals. You see in the middle there a host of other countries from the Asia Pacific region, from Africa, and a few also from Europe. Okay, looking into the Americas more specifically, the best performers are these 10 that you can see on this graph in the left side of your screen. Again, Brazil was the strongest, followed by those other island destinations, but also South American and Central American destinations like Uruguay, Panama, Bolivia, Ecuador, even Guatemala and Mexico, with fairly solid growth in this 9-month period of 2025. If we look at the best performers, but relative to 2019, so not compared to last year, but compared to before the pandemic, we get this other picture. So El Salvador there with 88% was the strongest performer compared to the inbound tourism it had in the year 2019. With right now, arrivals are almost double those they had in the same period of pre-pandemic year 2019. And then you see a number of other destinations with fairly strong growth compared to 2019. Strong double-digit growth. You can see Guatemala there with 40%, the Dominican Republic with 32%, Colombia 56%, and then further down, Honduras and Panama also with about 25% increase in arrivals. So this is the same list of best performers, but for receipts. So the best performing destinations in terms of revenue in their destinations, again, only countries which have reported data at least up until August of this year. So again, you see a number of destinations from different world regions. In terms of destinations from the Americas, you see Chile up there with 30%, Nicaragua 19%, Brazil 12% growth, and then Panama 9%, and the island nation of Barbados with 8%. So a good number of destinations in the Americas in this list of best performers. To finish, I will just share with you the results of an online survey that we do among UN Tourism Panel of Experts every 4 months. In this question here, specifically, we asked tourism experts around the world, what are your prospects? So what is your outlook for the tourism sector in your destination for the last 4 months of 2025? So for September, December 2025. And you can see that 50% of all experts believe that the performance of the tourism sector will be better or much better. So if you add the 44% of a better response with the 6% of the much better response, you get a 50%. Then there was a third of experts who mentioned that they expect similar performance or equal performance. You can see there 33%. And then about 16 or 17% who consider this last 4-month period to be worse or much worse. In terms of the actual factors or risks to the sector, this graph shows those threats that the tourism experts around the world are more concerned about. At the top of the list, you see high transport and accommodation costs. So almost 50% of all tourism experts in the survey mentioned this issue. As you know very well, inflation, and especially in inflation in services, has been a major problem for many destinations around the world. Other economic factors were also mentioned, the possible slowdown of economic growth, or the volatility in the price of oil, or the rising of interest rates. Those are all concerns also related to the economy that experts mentioned. Low consumer confidence was also mentioned, related partly to the economy, but also to other factors. Geopolitical risks, you can see there. Earlier in the year, the trade tariff war, that was a possibility, a real possibility between the United States and some countries around the world. And tourism experts consider this to be also an adverse factor because of the tensions that it might create between countries. And then another list of factors you can see there. I won't read every one of them, but you can see there some of the other factors that were mentioned by the experts as ongoing, let's say, threats to their tourism destinations. I will leave it there, and I thank you very much, and look forward to any comments or questions you might have. Thank you very much.
Thank you very much, Javier. And I will now ask my colleague Florencia to kindly share with us a message from our regional director for the Americas, Mr. Gustavo Santos, who unfortunately, due to another commitment, could not join, but has left a message for those participating today. Florencia, if you could please share the message. Thank you so much.
Bienvenidos a este nuevo webinario que generamos junto con Amadeus para presentar los informes de la situación de nuestro balance anual hasta la fecha y sobre todo el aporte que hace Amadeus recolectando información de vuelos y de alojamientos con un carácter prospectivo que nos va a permitir ver las tendencias de consumo hasta el marzo del 2026. Este acuerdo, esta integración con Amadeus, un miembro afiliado de nuestra organización, comenzó en 2023. En aquel momento era un informe solamente para las Américas. Hoy, gracias a Dios, ya se proyecta a todo el resto de los continentes, liderado por el área de competitividad, estadística y políticas que coordina, que lidera nuestra querida Sandra Carvajal. Estoy seguro que esta información de carácter prospectivo, que va marcando las tendencias de consumo, que va marcando los niveles de ocupación, que va marcando de dónde vienen los principales clientes, cómo se está comportando el mercado, será de una enorme utilidad para la toma de decisiones. Que esta nueva jornada sea inspiradora, que le sirva a los Estados miembros, porque esto es lo que hemos querido brindar, un nuevo servicio para nuestros miembros de las Américas. Muchísimas gracias a todos. Bienvenidos a este webinario.
Thank you very much to our regional director for the Americas, Mr. Gustavo Santos. As he has very rightfully mentioned, we have with us our partner from Amadeus, and without any further ado, I'll pass the floor to Olivier Ponti, who will take us through the latest trends in markets in the Americas. Olivier, the floor is yours.
Thank you very much, Sandra. Thank you so much for this kind introduction and for having us participate to this webinar. If everything's working as it should, you should now see my screen. So let's get going. And before we delve into the data, I'd just like to say a few words about Amadeus. We're the travel tech company behind half of all travel transactions made worldwide. And all these transactions, they generate a wealth of data, which can be used to understand present and future travel trends. Our travel intelligence allows destinations to understand the full traveler's journey from the moment they start searching for their next trip to the moment they book, stay at the destination, and come back. This is what drove the insights for this report. So what do all these data points tell us about global travel trends, and how does the Americas fit in the global picture? To answer this question, we'll take a look at indicators coming from two different sectors, hospitality on the one hand and at the left side of your screen, and air travel at the right-hand side. Both of them are telling the same story, that of a moderate yet sustained growth. Looking at worldwide occupancy over the past 12 months, here careful, there's a slight difference with the data that Javier has just presented. We're not looking at the exact same time period. So during those past 12 months, we've seen a modest 0.2 percentage point growth compared with the same period last year. And during that time, the average daily rates increased by 1.27 percentage points. When we compare the Americas to the world, we see that overall, it trails a bit behind global numbers, but has a higher average daily rate than the world average. And this means that hotels in the region are making the most of their bookings. Average daily rates across the Americas hold a stable upward trend, with US and Canada maintaining the highest levels and Mexico showing solid gains through the year. This consistency suggests that travelers continue to value the region's offering, giving destinations room to innovate in value-based pricing and premium experiences. Let's take a closer look at the evolution of travel demand for the whole region. And we'll start by analyzing the evolution of travel intent, with the origin markets searching the most for a trip to the Americas on the left-hand side of this chart, of this slide. And then we'll take a look at the travelers actually booking their trip, what we'll call the traveling side, the table to the right. So some interesting points. Brazil is in second position in searches. However, it ranks 6th in bookings. This looks like a great opportunity to further develop that market and convert those searches into actual bookings. It's also quite striking that China is rising in travel intent, jumping from 12th to 8th position in the ranking of searches. And last but not least, the US is still the market that searches and travels the most. No big surprise here. In the previous slide, we've looked at the largest markets in terms of volumes. I'd like to change the approach a bit now and look at the markets growing the fastest for the Americas. These are the markets you should have on your radar if you're looking into new opportunities. Search interest from Canada, China, the Republic of Korea, and Japan is rising sharply, between 30 and 41% year on year. Puerto Rico and the Dominican Republic show strong growth, both in searches and bookings. Argentina also has good growth in searches and leads the growth in bookings. This points to new segments actively exploring the Americas, giving destinations the chance to tap into a more diversified visitor mix and reduce dependence on traditional markets. So far, we've looked at the Americas as a whole. Now, let's break the results down by sub-region, and we'll start with North America. Let's begin with passenger traffic, which is globally stable with a 0.2% year-on-year growth. However, traffic for North America is showing a peak in January 2026 that surpasses January 2025 traffic levels. So this is encouraging for travel professionals in the region. Now, does this slide look familiar? It should. We've seen one very similar just a few minutes ago. So you know the drill. On the left-hand side, you see searches, and on the right side, you see bookings. The key idea here is that North America continues to attract a highly stable and diversified visitor base across both searches and bookings. The top origin markets, the United States, Canada, Mexico, the UK, China, India, Germany, Japan, and France remain consistent year over year. This reliability gives destinations a strong foundation for long-term planning and targeted engagement. As mentioned earlier, when talking about the continent as a whole, there's a good opportunity with Brazil that shows up high in searches, but not in bookings. High growth origin markets reveal new opportunities, especially from Asia and regional travelers. Search interest is rising sharply from Canada, South Korea, China, Japan, Mexico, and Taiwan. These fast-growing segments signal a widening pool of interest and offer destinations the chance to expand into new high-intent markets. Also keep a close eye on Puerto Rico, which is not only signaling good search numbers, but also translating them into bookings. On the hotel front, on the books data shows that 2024 bookings were higher at this point of the year, but 2025 stabilizes almost at the same level in 2026. January, February, and March are looking pretty good. ADR levels remain resilient and steady across North America, reflecting travelers' ongoing willingness to pay for quality. Despite seasonal fluctuations, ADR across major markets shows stable pricing, especially in the US and Canada. This indicates strong confidence in the value of North American destinations and supports opportunities for premium positioning and experience-driven upselling. Now let's move on to the Caribbean now. And in this region, we observe a small 0.6% decrease year on year in traffic. This figure refers to the period between November to October. However, we can see an optimistic forecast showing higher levels for 2026. The traffic for the month of January, February, and March looks pretty good compared to last year. So, dear friends in the Caribbean, hold firm as more business is coming your way. Looking at searches and bookings, it is clear that demand remains anchored by a strong and consistent set of core origin markets. The US, Canada, France, and the UK continue to lead both searches and actual travel to the Caribbean, showing remarkable stability year over year. This predictable core provides destinations with a reliable demand foundation to build long-term strategies and seasonal patterns. Besides, Caribbean destinations are expanding their reach as new high-growth origin markets emerge. Search interest from China, Puerto Rico, Mexico, Costa Rica, and Guatemala is accelerating quickly. This highlights a strong appetite from non-traditional markets, giving destinations an opportunity to diversify their visitor mix and tap into growing traveler segments. On the booking side, it is interesting to see as well the strong dynamism of markets like Argentina, Suriname, and Mexico. And while we see a lot of searches coming from China, our data on the booking side might not show much conversion. And this reflects the lack of direct connectivity between China and Caribbean destinations. The on-the-books data for the Caribbean looks very positive, especially for the first quarter of 2026. But the November-December also show a slight increase. This bodes well for the end of the year celebrations, which are typically a key season for the region. ADR levels show healthy pricing power, especially among premium destinations, and average daily rates remain robust, with Aruba leading and the wider Caribbean maintaining stable and attracting rate levels year-round. This suggests that travelers continue to value the region's quality and experience-driven stays, giving destinations room to develop higher value products and upsell opportunities. Moving on to Central America this time. Central America has seen a good growth year-over-year, growth of 4.3%. And it also signals positive forecast for the early months of 2026 with a growth compared with the previous year. The US, Canada, and Mexico are at the top of the list when it comes to markets searching and visiting Central America. And interestingly, Spain ranks 5th in terms of searches, but shows as number 2 in bookings. This high level of conversion suggests a strong affinity with the region. The Spaniards tend to know what they're looking for. Here again, Brazil is showing in the top 10 in searches. However, it is not showing in our top 10 of bookings, which probably indicates a good opportunity for DMOs to try to convert those searches into bookings. Emerging long-haul and regional markets are becoming powerful new demand sources. High growth origin markets such as China, the United States, Jamaica, Argentina, Mexico, Costa Rica demonstrate a widening pool of interested travelers. This diversification gives destinations a unique opportunity to broaden their reach and reduce reliance on traditional markets. As regards to hotel performances, on the books data has been consistently higher compared with last year. And for 2026, we can already see an uplift in bookings. ADR trends show steady pricing power across the region, especially in premium markets. And average daily rates remain stable across market, with Costa Rica continuing to lead and other destinations holding consistent values month to month. This points to travelers' ongoing willingness to pay for experience-driven, nature-focused, and boutique offerings, supporting opportunities for upselling and premium positioning. We'll end our tour of the Americas with South America, and the region does not disappoint, as we've seen in Javier's presentation as well. It is the one registering the greatest year-over-year growth in terms of passenger traffic. No doubt you'll have noticed a big peak in January, suggesting a strong start of the year. Comparing searches and bookings, we can see that destinations in South America probably still have a good card to play on the US market, as the US is searching a lot, but only ranks 5th in terms of bookings. Canada is also quite promising, as it shows in the top 10 of searches, but not in actual bookings, signaling an opportunity for local DMOs in South America to convert these searches into bookings with targeted marketing campaigns. Now, long story short, for this slide, China is the breakout growth opportunity. China shows the fastest growing interest, plus 82% in searches, and also strong booking momentum, plus 46% year over year. This alignment between aspiration and real travel positions China as a high potential strategic market. Looking at hotel performances, the on the books data has been consistently aligned year over year in the region, with a slight positive momentum heading to March 2026. And as to the ADR, it remains stable with a slight upside coming from Brazil and Colombia. While ADR across South America stays within a relatively narrow band, Brazil shows seasonal peaks and Colombia shows gradual upward movement, both of which could help lift overall revenue performance. So, congratulations for staying with me until the end of this presentation. I know we've gone through a lot of slides that look rather similar, so a little wrap up with the key ideas could be useful. The first takeaway is that travel demand across the Americas continues to strengthen, with year-on-year passenger growth visible in most regions, especially Central America and the Caribbean. Second takeaway, Hotel performance remains resilient with rising occupancy and solid ADR levels, especially during peak months. Third takeaway, origin market behavior is diversifying, with emerging markets in Asia and Latin America showing some of the fastest year-over-year growth in search and booking activity. And last, forward-looking data points to a strong flow of bookings, as on-the-books occupancy trends that point to sustained momentum heading into early 2026. In short, I think there are some good reasons to be cautiously optimistic about tourism growth in the region as we enter in 2026. Now, before we move on to the Q&A part of the session, I'd like to offer participants the possibility to get a free tailor-made report using the wide array of data we have at our disposal. Just scan this QR code, indicate which destination or market you're interested in, and my colleagues will prepare a snapshot that should help you getting started with data. See it as an early Christmas gift. With that, I thank you very much for your attention, and it's back to you, Sandra.
Thank you very much, Olivier. Thank you for taking us through the latest trends and to show us opportunities in some of the emerging markets. It is now time to open the floor for questions. As I said before, we do have here in our Zoom room our colleagues from UN Tourism member states, English-speaking ones in the Americas. Any question, any comment, please do use the chat function, and we will be very happy to share the question either with Olivier or with Javier on the trends that were showed today. Or if you want to share your own insights from your country, what are you seeing in your destination that aligns with what you've seen or not, if you're seeing emergent trends that have not been mentioned this morning, this afternoon. So please feel free to reach out to us. I also want to mention that after the session, our colleagues will email you both presentations, and we will be at your disposal for any other questions that you might want to have, further information as well. Colleagues in the Caribbean, please feel free to share your questions. We'll be more than happy to answer any doubts or any comments that you might have. No comments. So I think it was very clear from Olivier and Javier's presentation. As again mentioned before, I would like to take this opportunity to thank again Amadeus for the partnership with the different regional reports and for giving us the opportunity to share with member states an update of the current trends, particularly short-term trends in accommodation and air transport bookings, and provide prospective information to guide us through the preparation of 2026. Once again, thank you very much to Javier and to Olivier. And please stay tuned. This will have more sessions next year for sure. And we will be in touch with the presentations. And as Olivier said, if you haven't been able to scan the QR code, reach us and we'll be happy to put you in contact. Thank you very much and have a very good day on the other side of the ocean.
Thank you so much.
Bye bye. Thank you.
Thank you. Bye bye.
Thank you, everyone.